Would he close down the oil industry?
It falls.
Would you close down the oil industry?
By the way, I would transition from the oil industry, yes.
Oh,
I will
that's
transition.
a big statement.
It is a big statement.
That's a
because
big statement.
I would stop.
Why would you do that?
Because the oil industry pollutes significantly.
Oh, I see.
Here's the deal. But
that's
you
a
can't
big
do
statement.
That. Well, if you let me finish the statement, because it has to be replaced by renewable energy over time. And I'd stop giving to the oil industry, I'd stop giving them federal subsidies. He won't give federal subsidies to the gas, excuse me, to solar and wind.
Yeah.
Why are we giving it to oil industry?
We actually do give it to solar and wind. And that's maybe the biggest statement in terms of business. That's the biggest statement.
Okay.
Because basically what he's saying is he is going to destroy the oil industry. Okay. Will you remember that, Texas? Will you remember that, Pennsylvania, Oklahoma?
Vice President Biden, let me give you 10 seconds to respond,
Ohio.
and then I have to get to the final question. Vice President Biden.
He takes everything out of context. But the point is, look, we have to move toward a net zero emissions. The first place to do that by the year 2035 is in energy production, by 2050 totally.
All right. One
is he
final
going to get
question
China
to
do it?
No, we're finished with
is
this.
He going to get China
to our
do
final question.
No,
We have to
I'm
move on
going
to
to
our final
rejoin Paris
question.
Accord and make China abide by what they agreed to.
All right.
Talk about ESG investing, but the strategy could come with a cost. Christina Partsenevelis joins us now with the story of what you might call greenflation, among other things to think about. Christina, I hope we are.
Well, I'm going to get to those numbers to see if we are or not. But Americans get roughly about 80% of their energy from fossil fuels, such as coal, petroleum, and natural gas. And with so many itching to travel right now, demand for oil is expected to keep rising in the years ahead. But analysts at JP Morgan say right now as much as $600 billion must be invested in oil by 2030 to keep up with demand. But you've got banks, firms like BlackRock, funds like the Harvard Endowment Fund, who promise not to do as much traditional energy investing as they once did, preferring to focus on renewable energy sources that aren't as damaging to the environment. But a focus on ESG, environmental, social, and governance, is driving a credit crunch for oil and gas companies. And some argue that transition isn't cheap.
The problem with ESG is it's promising cake with no calories. All the good stuff with no sacrifice. And let's face it, being good will cost you.
With clean energy initiatives and supply chain issues, prices have soared for green energy raw materials like aluminum and uranium, helping the stock prices of aluminum producers like Alcoa and Uranium Energy Corporation. You can see on your screen, both up well over 100% this year so far. But coal-related job losses loom in energy-producing states like North Dakota and Wyoming, for example. And you can see this bar chart on your screen, just how many coal mines actually remain in the United States over the past decade. But many argue the short-term losses will be offset by increases in carbon-low sectors like solar and the electric grid. Listen in.
I think it's important to note that those increased investments in infrastructure will be outweighed by decreases in costs of energy. So the overall system-wide cost of electricity should be balanced out.
Companies that fall behind the green technology curve or stick to dirty sectors could see their access to capital markets turned off. But ESG advocates say the short-term costs, as we just heard, are just a feature of going green.
We need to accept that there will be some pain in the process. The pace that we need will open up for missteps. It will open up for shortages on energy. It will create inflationary pressures, and maybe we need to start talking about that pain is actually worth it, because if we don't, there's no business case, there's no economy, there's no welfare. But so far, I think we have been a little bit careful actually talking about the pain in the short term that is likely to come from this very important change. Yeah.
Given how inflation has escalated over the past 18 months, would you say that the war in Ukraine is the primary driver of inflation in America?
No, inflation was high before, certainly before the war in Ukraine broke out.
We basically had inflation under control for 40 years. despite the fact that the price of oil fluctuated, despite the fact that there were all kinds of supply shocks. We lost the thread, along with many other countries, about a year and a half ago with massively expansionary policies relative to the size of the GDP gap. The fiscal stimulus was 5 times as large as it had been during the financial crisis.
As you mentioned, the Inflation Reduction Act, that might be the name, but it's a huge environmental bill that includes a lot of things such as the tax credits necessary to make these kind of developments.